Hi guys, hi everyone that's been waiting. Thank you very much for your patience. We are expecting a really great number of people to be tuning in today, which we're both excited about. I think, because we do have the number one tax agent or partner, I should say, in South Australia here with us today. So we're very lucky to have Craig. So I'll just introduce myself quickly. I'm Tammy Barton, the founder and director of MyBudget. MyBudget's a personal budgeting company that helps people to put budgets together. We manage those budgets on their behalf, also that people can live their life without having to worry about money. We take care of everything for our clients, and taxation is something that everybody has to deal with and handle every single year. And it's quite a complex topic, and there's lots of nuances, which is why we have an expert with us here today, Craig Whiteman. So Craig, if you would like to give an introduction and tell the viewers who you are and what you do and your background and that sort of thing.
No worries. Well, first of all, thanks for having me today, Tammy. It's great to be here with you and with all your clients. So, yeah, Craig Whiteman's my name. I'm a tax partner at EY, as you said. So I've been an accountant, I guess, and specialising in tax for more than 20 years. I'm based in South Australia. We work with a whole wide range of clients, from individuals all the way up to sort of large private businesses and some large listed ones. As you say, it's coming up 30 June. It's a really exciting time of year for tax people like me. Hopefully not everyone's getting too excited about it, but accountants are allowed to. So it's great to be here today and share hopefully a few tips and traps for your clients.
Yeah, fantastic. And this topic came about actually from a lot of requests from our clients and also from staff, because it is such a complex thing, and nobody, except for yourself, Craig, and I kind of enjoy having conversations about taxation as well, which is odd, I know, but it is a complex topic. So let's and a lot of people right now are doing it tough. So if there's any way that people are able to get a little bit back on their tax return because they learn about things that they were able to claim and they didn't know about, all within the tax legislation. So that's what we'll be talking about today.
I'll just say one of the things as well, there's lots of myths around tax and what you can and can't claim. Often we hear some tremendous stories about, my friend told me that you can claim this. And you say, oh, that's not quite right. So I think it's good to, whilst you hear things, and it's good to be creative, but to also challenge and make sure that you're not doing something that the ATO would not agree with.
Because you don't want to be caught in that situation where you've claimed something and you really shouldn't be. And I'm one of those people that I've heard it all the stories, but I'm very fortunate because Craig's actually my accountant, that I will run past any of these wild and crazy suggestions past Craig to make sure that, I'm operating within the compound of the taxation legislation. So let's get into this very exciting topic. I find it exciting anyway. So I'm going to start with a really basic question.
Sure.
So, because everybody may not know, when are tax returns due?
Yes, well, it sounds like a simple question, but there's lots of different dates depending on your situation. So if you're actually lodging your tax return by yourself and you're not using a registered tax agent, your tax return is due on the 31st of October, following the end of the year. You do use a tax agent to help you navigate through some of the complexities. The deadline depends on sort of the amount of tax that you paid the previous year. So it could be as late as 31 March or potentially 15 May, or even in some cases, if you got a refund the year before, it could actually be the 5th or 6th of June. If you use a tax agent, you get a much more extended period of time to get your tax returns done.
And of course, if you think that you're going to be due a return, you want to be able to do that tax return as soon as you can, because the money is better off in your pocket or offsetting your mortgage or in your budget than sitting with the ATO.
Absolutely.
So on to the next question. So there's been some changes in the most recent federal budget. Are you able to tell us, what does this mean?
Well, there's, as an accountant, I guess we look forward to the budget each year to see what tax changes there are going to be. In the most recent budget, there weren't too many that impacted individuals, which in some respects is a good thing because the personal income tax rates didn't change. There are a few announcements that had been made before, like for 30 June 23, the tax year we're just going through, the low and middle income tax offset is no longer. So that was highlighted by the government 6 or 7 months before, so that wasn't a surprise, I guess. The low income tax offset is still there, so that is a refund or rebate of up to $675 for people that are earning up to about $67,000. So that still remains. But unfortunately, the low and middle income tax offset, which was a benefit to people that earned up to $126,000, that's gone.
Yeah, and that's a shame. And so if you are lodging your own tax return, say through the ATO app or the portal, when you complete that application, if you don't have a tax agent, that will automatically be applied, won't it?
Yeah, that's right. That's the way that the rebate system works.
Yep, great. Okay, so I think it's a good time to do a quick poll for the people that are tuned in. So what I'm interested to know, because I sometimes get surprised by this when I'm talking to people, is I'd like to know how many people actually know the tax bracket that they fall into. And we'll touch on this a bit later, and this is an important one to know. If you do have a second job or side hustles, or you're doing overtime and that sort of thing, you could be pushing yourself into the next tax bracket. A lot of the reason why we've probably got so many people registered today, and of course everyone can access this link later because there'll be some people working who just can't get on live, but they'll watch it later, is because they want to be able to maximise how much tax they can get back. And so this is what everybody wants to know. What is the best way to do this through claiming eligible deductions? What can people claim for? And what are some things that people may not realise? There's some of those little nuances that people can claim.
Yeah, good question. It's a very broad and big question. So fundamentally, you can claim a deduction when you're incurring expenses that are related to you earning your assessable income. So whether that's your wage as a bus driver, as a nurse, as a teacher, as a doctor, it all really depends. It has to have a connection with how you earn your income. But there's lots of common types of expenses that apply to lots of different professions. So perhaps we'll just talk about a few of those.
Yep.
So the one, and often the biggest deduction that people have in their returns is around their motor vehicles and their use of motor vehicles. So there's quite a few different methods. There's two different methods you can use for claiming motor vehicle expenses. So one is cents per kilometre. So you can just estimate how many business kilometres you have done, or how many kilometres you've used your car to help you earn your assessable income. And you can claim 78 cents a kilometre up to 5,000 business kilometres. So that can give you a deduction of nearly $4,000 in your tax return. Yeah. So depending on your marginal rate, that can be quite well done. Some people use their cars a lot for work, and so you can actually claim. Another method is to use the actual expenses. So you claim using the logbook method. So that requires a bit more work. You need to actually keep a logbook for 12 weeks. Sorry.
Yeah.
And that logbook is valid for 5 years once you've done it once, so long as the logbook percentage or your business use percentage is sort of still representative of the amount of time you use your car.
Yeah.
So you keep your logbook for 12 weeks. You work out the calculation of business kilometres divided by total kilometres. So let's say you have a 70% business use, and you then need to tally up all your motor vehicle expenses. So that includes repairs, new tyres, registration, fuel, insurance, all of these things. You tally all of them up, depreciation, and then you just apply the business use percentage to the total of the motor vehicle. So depending on how much you're using your car, that can be quite a significant deduction, and often outweighs the cents per kilometre method, which is really designed to make compliance a bit easier for people who don't have that need.
Yeah. So if you're using your car quite a lot, especially if you're using it for more than the 5,000 kilometres, keeping a logbook is smart. And I know that there's lots of ways you can do that digitally now, different apps that you can use, and we might be able to share some of those later as well, to keep track of all of your kilometres. Things like uniforms and that sort of thing, I know you can claim those. You know, if they've got the logo, you can claim washing and dry cleaning. A question that a few people have asked is, on your phone, how much can you really claim for your phone? Is it 100%? If you need to use it for work and buy the phone, you have to have that device for your role or your job. What can you claim?
Again, good question and a common one. So again, it comes down to how much you use your phone for business purposes or for work purposes. And the ATO expects you to be able to substantiate the business use percentage of that phone. So, and there's a couple of different ways you can do that. Obviously, if you have an itemised bill, I think the ATO would like you to go through a representative period, again, sort of 4 weeks, look at all the calls that you made, all the texts that you made, work out what was business related, what was private, again, come up with a percentage and then apply that percentage to your total phone costs over the course of the year. So that would cover like your monthly charges and call charges and things. In terms of the actual phone itself, and this is sort of a common rule across lots of different types of expenses. So if you have to buy a phone or a tablet or something that you use for work and it costs more than $300, you can't claim that outright. You need to depreciate it. So if it costs less than $300 and it's 100% business, you just claim the $300.
Yeah.
If it costs, like, I wish iPhones cost $300, but they don't. So if your phone costs $1,800, what you need to do is depreciate that over probably 3 years is sort of typically what we see for a mobile
Unless
phone.
you're replacing it, say every 2, you could depreciate it over 2, I'm assuming. If that's what you do, if you've got a 2-year contract and you depreciate it.
Yeah, that's right.
Yep.
So you'd say, okay, well, it costs $1,800, write it off over 2 years. But if you're only using it 50% business use, you'd say, right, 2 years, so $900, and then you just claim the depreciation for the 50%. So again, a little bit of complexity, but probably given the fact that a lot of people use their phones a lot for work these days,
they do.
Definitely worth putting the work into be able to make an eligible claim.
And then, we've probably got a lot of tradies and stuff. They might not be listening because they're probably out in the job site, but they might check the link later. Or your protective clothing, your steel cap boots, and one that if you're driving around a lot and you need protective eyewear, sunglasses. Is there any kind of nuances with the sunglasses? I've heard people say, oh, but they have to be polarized, and I've heard other people say, oh, no, they don't.
Yeah. So I've not heard the polarized one. I think, again, fundamentally, I think if the equipment is required for safety purposes, like you just steel cap boots and things, and you need them for work, 100% they should be deductible.
Yeah.
I think if you are required to work outside for extended periods of time, then I think, there's absolutely a valid argument for claiming sunglasses for eye protection. Similarly, even things like sunscreen. So if you need to be outside and you're working in the blazing sun, and it's a requirement of your work, and if you're in construction, or perhaps even if you're a teacher and you need to do yard duty or be umpiring sports and things, then I think there's an argument for some of those expenses to be deductible as well.
Yeah. So anything else, obviously donations, there's all the obvious ones, but is there any other little nuanced things that we could claim?
Yeah, I think one thing that's been very prevalent in the last couple of years is obviously because of the pandemic, we had this people choosing to work from home or having to work from home.
Yes, good point.
So the ATO's changed their rules a little bit on how you claim a working from home deduction for 30 June 23. So during the pandemic, they created this sort of shortcut method. So you could just claim 80 cents an hour based on how many hours you thought you were working at home, or you could show you're working at home based on a diary or something. They've changed that now. So the shortcut method is finished. But there's still 2 methods you can use for working from home. Again, it comes back down to this, what's reasonable. So you can use your actual expenses, so your actual costs of working from home. So you add up things like your internet that you've got for home, stationery, using your printer, depreciating a printer, things like that. Energy costs, work out how much of those relates to doing your business, and you can claim a deduction for that.
Yep.
Or again, there still remains a shortcut method. So they call it the fixed rate method. And that is 67 cents per hour, and that's supposed to cover all those sort of things like energy costs and so on. So you need to be able to, from 1 March 23, they changed the rules. So you need to actually keep a record or a diary of the hours that you're working from home. So that could be as simple as whatever calendar app you're using. If it shows that you work from home in that day from 8 a.m. until 3 p.m., then that's enough evidence, I think.
So start keeping a record of the days or the hours that that you're working from home. And we'll get off this topic in a second, but a lot of us ladies and females ask about, what about our bag that we carry our laptop around in, and what are the rules around that?
Yeah, so this is a good example of where you've tried to be creative in the past, Tammy, yourself.
I'm a creative person.
Yeah, so again, I think if the bag that you're using is sort of almost not purpose built, but its primary function is really to make sure that when you're carrying your laptop or tablet around and you use that primarily for work, if it's sort of fit for purpose and that's what its primary function is, then I think you'd be able to claim a deduction for that sort of bag, a briefcase. If you're traveling a lot for work interstate, you need to have like a small bag to carry on.
Oh, like your carry-on little luggage bag.
Yeah.
Oh, okay.
But again, if you used, again, the ATO would ask you, that's okay, well, are you using it for private purposes as well? If you say, well, I don't travel for private, I only travel for business, then that's fine if that's true.
You could look at your percentage of travel and say 40% was for work and 60% was private or whatever it might be.
Yeah, that's right.
Yep.
And again, for those sort of expenses, it needs to be less than $300 to claim it outright.
Yes.
Plus the business use. If it was $1,000, probably not. You need to depreciate it again, like we talked about with the phones. But with your little Gucci handbag, if you bought a handbag and you put your lipstick and your mobile phone in,
I've never claimed one of those.
no, then I think that the ATO would take a view that that's more of a private expense, and I don't think that allows
Yeah,
deduction
fair
for
enough.
that.
Yeah.
And that's similar with we mentioned the uniforms before. So things like and a lot of employers require their employees to wear conventional clothing, right? So we want you to wear black jeans and a white shirt. And the ATO's view is that if it's conventional clothing, it's really hard for individuals to be able to justify a claim that that's tax deductible, even though it's a requirement of the employer. They still take the view that's really private expenditure that can be used for other things. So you generally can't make a claim for that.
Yeah, that makes sense. All right, so I'm going to go back to the poll, and it looks like the question was, if there's new people that have just joined, do you know what tax bracket you fall into? Only 23% of people, and that's around about where I thought it might sit actually, say yes. 38% were not sure, and 38% said no. So what do you think, Craig? How does that sit with
it's interesting.
Your experience?
Yeah, it's probably about what I thought, maybe a bit under.
Yeah.
And it's an important thing to know, and it's
Yes.
actually it's topical too, because we mentioned the budget before, which there wasn't that many changes to the tax rates and the tax thresholds.
Yeah.
But one of the good things out of the budget was, and touch wood, this is still the case, people heard people talking about the stage 3 tax cuts that were announced nearly 4 or 5 years ago by the previous government, and the Labor government have so far committed to ensuring they continue to be implemented. And they're going to be implemented from 1 July 2024. So not this tax year, but the next one.
Yeah, great.
And what those stage 3 tax cuts about is really collapsing the different thresholds that you have. So at the moment, your first $18,200 is tax-free. And then there's a couple of different rates as you go from $18,200 to 180 of 32.5% or 37%. So if you click over between 45,000 if you're earning 43,000, you're effectively paying a tax rate of 32.5. For every dollar above 45,000, those extra dollars, whether that be with the employee or side hustles or whatever, then you're paying 37%. So it's good to know where you sit in your thresholds.
Absolutely.
The stage 3 tax cuts will eliminate that. So you'll have a 0 to 18,000 tax free.
Yeah.
Then you'll have basically 18,000 to 200,000, just a flat rate of 30%.
Oh, right.
So everyone will sort of be effectively on the 30% rate.
That makes it better because for those side hustles, because at the moment, if you're earning an extra $5,000 or $10,000 and you're right on that cusp of going from one tax bracket to the other, you may not realise that you're actually paying a much higher tax rate on that income, and it's just something to be mindful of because you don't necessarily think about it if you're earning the money as a side hustle or you're doing something else to earn that money, or even overtime and that sort of thing. Whilst it's good to do that and earning, I always say it's good to pay tax because that means you're earning more, right? So you should be paying tax, and it's good to be paying tax because it means you're doing more and you're earning more. So it's not a bad thing, but it's just to be aware of. Just to be aware of. Now, I know we've also had a couple of questions come through, so I might skip ahead. One of them is the tracking system for receipts, and I know that the ATO have a great system in their app, and I'm going to tell my son about it because my son just actually takes a photo of his receipt and emails it to me, and then I have to file it and get it ready for his tax return. He's only 18, so he's learning, but I hear the ATO app is really great. I'm going to download it myself.
Yes, the ATO has a lot of great material actually. So in terms of capturing, one of the easiest things to help you get your tax return done quickly when it ticks over 30 June is to have all your expenses and all your receipts sort of close to hand. And the ATO app, which you can get off the App Store or through MyGov, has got exactly a great function where you can just take photos of the receipts, as you said. Then they don't fade, you don't lose them, and they're all captured. So if you do it in real time, when you come through, there's even a process to upload that into your tax return if you're using the ATO's software as well. So it makes it even more seamless than otherwise.
Which I've also heard that doing your tax return yourself through the ATO portal is really straightforward and easy. I mean, my tax situation's a little more complicated with the business and other things, so I haven't had personal experience, but I'm certainly going to be walking my kids through how they can do their own tax returns, and I really encourage people to have a look at it and not be afraid of it because I hear it's relatively straightforward and they've done a really good job.
They have done a good job. Not to say that you don't need to use a registered tax agent, because obviously don't talk myself out of a job, but
Yes.
they have spent a lot of time and effort in creating this tool for people to use. And there is actually a lot of education in it. So if you go through and you want to thinking about claiming some laundry expenses, for example, it will give you some additional information to read. So you can actually read a bit online from their resources, and then sort of make a decision whether you want to make a claim or not. And also the benefit of using the ATO, My Tax, it's called, actually, through the ATO website or MyGov.
It's not our brand.
Is it does as well, all the pre-fill and so on. So you go through, answer a bunch of questions. You say, this is my employer, I've got a bank account with CBA, and it uploads all the information. So it does a lot of pre-fill for you as well. So in some instances, if you depending on your personal circumstances, you just tick the boxes and it'll upload the tax return. You can read the tax return and go, yeah, that looks okay, and then you can lodge it. And I think, again, they say if you lodge using the ATO version, they say you'll get your refund quicker, which take their word for it.
It probably makes sense.
Yeah.
It sounds far better than I remember when I used to fill out that booklet. When the tax-free threshold was $5,200, and I used to fill that out with a pen, and I'd go to my mum's friend who was an accountant. I'd pay him in a carton of beer to help me complete it, because that was in a book and you had to read all this stuff. And so it sounds like a far better user experience.
Yeah, I think it's good. But again,
these days,
it's something like, there's a lot of tax returns get lodged in Australia every year, but I think something like 65% still use accountants or tax agents to help them go through the process.
Because it is complex. It's not it's not something that's really simple, but it is good to know that there are those tools there if we need them. So speaking of the ATO, they always have a target list of people that they watch closely, and that changes from year to year. So what are they going to be? What are they going to be really watching, and where should people be really careful not to overstate?
Overstep? Sure. So I think, and a lot of these things are probably items that they focus on year, but where there's a change, like some of the things we talked about this afternoon, they will focus on those. So working from home expenses is an example, because I think people got used to claiming work from home expenses during the pandemic, and maybe the amount of time they've spent working from home in the year ended 30 June 23, in some instances might be significantly less, but people might be a bit reluctant to let go of that deduction. So they'll be paying close attention to work from home deductions. Rental properties, if people have investment properties, they're always looking and reviewing those closely. Particularly if there's any private use of the rental property, depending what style it is, making sure that the interest that's being claimed is right, and that it relates, the interest relates just to the property. Sometimes people will sort of amalgamate loans. So you might start out with a loan, but then you draw down a bit, and because you buy a car under the same loan, you just have the one repayment to keep things simple from a bank perspective. But that car probably, or the boat, or whatever it is that you've amalgamated, that interest is not deductible on that component. So they'll look for things like that. Capital gains tax. So anytime people have investments and they sell them, if you sell something in July, or whether it's shares or something like that, you can forget when you come around to do your tax return. So the ATO has access to an incredible amount of digital information now more than ever, and it's growing. So they'll be very attuned to any transactions in things like shares. So if you forget to include those, they'll adjust.
They'll eventually
chase you up.
And that's what you really want to be doing. You don't want to be in a situation where you're just guessing and you can't substantiate any deductions. You want to make sure that your tax return is as accurate as possible, and that you're following all the taxation legislation guidelines as best you can, albeit with the disclaimer, I know it can be complicated, but you don't want to be just randomly entering things and not being able to substantiate
100%.
it.
And something that's sort of been topical the last couple of years as well is crypto. So people are doing trading themselves on crypto and think that it's all private and it's a hobby. The ATO considers that trading in Bitcoin or whatever it might be, that's the same as capital gains tax or share trading, if you like. So if you're dabbling in crypto, and you need to include that in your tax return as well.
What about if you're learning about crypto, you could claim those expenses if you're earning an income, right? Like books that you might buy or webinars you might sign up for, or
I think
potentially.
So. Yeah, potentially. So if you are trading in crypto as well and you incur expenses, I think technically if you are thinking about trading in crypto and you buy a book before you start doing trading,
right,
the view might be, well, you've incurred that expense too soon. So probably best to do it contemporaneously. In that instance.
Yep, now that all makes sense. We were talking before about how do you measure your receipts, and how do you organize your receipts? So I might go out to the audience and do a poll. Do you have a system for tracking your receipts? We've already done it. Apologies. Yes, 44% of people have a system for tracking their receipts, which is unreal. That's great. That's higher than what I expected. And 44% say no, and 12% said they do that at the end of the year. So that's awesome. Thanks.
I feel for the 12% that do it at the end of the year, because I know what's that.
Yeah, and then you have to track things down and look them up. Yeah, it is. So this probably leads to a good question. What are the common mistakes that or tips that you can give to people to avoid making mistakes?
Yeah, I think so. Just being mindful of everything you've got. You sit back at the end of the year and go, okay, make sure that you think of all the different sources of income. People commonly, interest income, just because it's something that sort of happens, or it might not be that significant. Same thing with dividends and things. So any investment type returns that you get, make sure that you've included those in your tax return.
Yeah.
Don't accidentally understate your income, I guess, as well. If you have a salary, then it's sort of hard to do that because you get the payment summary from the employer.
Yeah.
But if you're doing other bits and pieces of consulting or have other sources of income, make sure you're including the full amount. I think focusing, we've mentioned a couple of times, the work from home expenses, making sure that you got, the ATO is very hot on substantiation. So, by all means, make a claim that you think is viable.
Yeah.
But just be prepared that, and often I think with my clients, if you're going to take this position, that's fine, and this is the justification for doing it. If the ATO were to ask you or do a review, what would you show them, and how would you sort of satisfy them that okay, that's fine, and they can move on?
Absolutely, and I think that's a good point. Is keeping a record. I did buy X, Y, and Z for this reason, because you might have to go back 2 years and you'll think, oh, I can't remember, I don't know. So just keep a record and file it away somewhere in whatever system you're using. Potentially some of these receipt tracking apps might be able to give you a spot where you can write comments and that, because you can forget. And it happens to me. Craig might ask me a question about something to do with an investment property or something, and I honestly can't remember. I have to go and look through my records and read my notes. And luckily, I like taking notes, but you can't remember everything. So if you can, get that system.
Well, sometimes you buy things in July, and then if you're using a tax agent, you might not do your tax return until May, nearly 2 years later. And so you can't remember why you bought that extra battery pack or whatever it might be.
Yeah.
So it's good. It's good advice.
Great. So are there any more questions from?
We have had questions.
Great.
So we've got a question. Can you claim reading glasses for use with a computer?
Can you buy reading glasses if you're using them to read for work? Is that a taxable expense?
So again, I think if you're using those glasses purely for work and for no other purpose, so you don't use them to read books or newspapers, then I think you could claim them if they're used purely for work. If there was a mixture, use them for work because you really need them. But if you wear your glasses 7 hours a day, then you wear them for 5 hours a day for other reasons, the ATO would want you to justify it. The ATO starting point would be, I think, reading glasses or glasses are probably inherently private. So you'd want to be able to prove that it has actually got a business purpose to be able to claim them.
I feel like that could definitely be a new expense that I can claim, because I often will not wear my glasses in social situations.
Right.
And I was almost not going to wear them for this, but I do need to see my screen, even though the words were printed out in big font for me. But I could almost say 80% of the time, very rarely I wear my glasses in a social situation or when I'm not at work. And in fact, I keep my glasses here on my desk. So there you go.
Don't use them for watching TV or anything, then maybe you've got a good argument.
Is the tax bracket individual or for a couple?
So in Australia, it's individual. So if you're husband and wife, they both get access to the tax brackets.
Fantastic.
In some countries, it's different. In the US, for example, it's a family.
Yeah. Another question: if the ATO considers interest earned as income, can that be offset against interest paid?
So interest earned is income all the time. Interest paid will only be deductible if the interest has been incurred if it relates to a income earning asset. So if you borrowed money to buy shares or buy a rental property, then yes, interest will be deductible. If you borrowed money to buy a house or a boat, which is not related to your business, then that interest won't be deductible. So it comes to the purpose of the use of the borrowed money as to when you can claim a deduction for the interest.
Great question.
Another one was around donations. Do you need to have a receipt for all donations that you claim?
Yes, I think you do. So any donation more than $2, they should give you from a deductible gift recipient, should give you a receipt, and you should have that on hand, ideally, when you lodge your tax return.
I thought there was some ruling, again, this could be one of those myths, where you could have up to a certain amount of donations that you didn't require a receipt for.
Yeah.
Like it might have been $100 or $200. I can't recall.
Yeah, no, I think that's a myth.
Oh, that's a myth. Okay, that's a myth, guys.
But, having the receipt, so if you had made a donation to Salvation Army, and you don't actually have the receipt, but if you had a credit card statement or some other evidence that showed that it's gone to Salvation Army, I would think that's a reasonable attempt at substantiation. But technically, the ATO will probably want you to have the actual receipt that the provider would give you. And typically now they're sort of done digitally anyway, often. So
the question that came in before the webinar, MyBudget fees tax deductible?
I wish. They're not actually tax deductible unless you're running your, and for some people, we run their business accounts through our service, and therefore that would be deductible, but for the most part, they are not. I would love to be able to lobby the government to make them deductible, but they would only be deductible if you're using our services for something that's helping you to earn income.
Yeah, so I think people that are using the service for managing and helping them manage their budget, again, the ATO would take the view that it's sort of inherently of a private or domestic nature, so hence why it's not deductible.
We did do a poll earlier.
Oh, okay. How are you going to spend your tax return? That was the poll. We had 40% of people say they're going to save. Well done to those 40%. 34% of people said that they were going to spend, and fair enough. And 25% said they'll use it to pay debt, which is also very clever, to reduce the interest that you're paying on that debt.
And the last question that we've got two. Can you claim donations that allow you to win a prize, e.g. the hospital research lottery?
So lottery tickets, no. Unfortunately not.
So what about when you're at a charity and you do, an auction, and you might buy something where you're giving a donation and you get a hair pack, or you get a bottle of wine, like in a lucky dip?
So each charities would probably construct their silent auctions and things like that differently. So it'll depend on the event that you're at.
Right.
So things like even like tickets to gala balls and things, sometimes there's a sort of donation component built into the cost of the ticket. So if a ticket costs $200, maybe $100 of a donation, $100 is private. So it depends on each one. There's not a one size fits all. But typically if you buy an auction item at an event, and you're actually getting the physical value, even though you might pay more than what it's worth because you're saying, it's for charity, typically you won't be able to claim a deduction for the hair pack.
That's a shame.
Yeah, it is.
We want to end on a high. What can we?
Well, last question, just because we'll run out of time. Do your shares need to be included in every tax return, like each year, or just when they're sold? So when you purchase the share, does it have to be included from the date you purchase it, or only when you sell that share?
So once you buy the share, you've earned it. That's fine. You're holding it. That's fine. If it gets a dividend paid on that share, so if you're holding the dividend and BHP pays a dividend, that needs to be included in your tax return
as income.
But if you don't, so any dividend you get off that share, you need to include. You don't need to include it otherwise unless you sell it. So if in 4 years' time you hold it and you sell BHP, then you do the calculation for capital gains tax and you include that gain at that point.
So it'd be like any other asset that you're buying as a capital gain or as a capital expense. If a property goes up, for example, it doesn't matter until you actually sell it, and that's
right.
when it's realised, the loss or the gain.
Yep, absolutely. And if you do make a loss, keep a record of it, because you can use that loss to offset gains in the future as well. So if you hold BHP, you lost some value in that, but you had Adelaide Bank, whatever it might be, then they can offset.
Yeah, and I will touch on one last thing, because 50% of the population go through a divorce. Bear in mind capital gains and capital losses when you're going through that divorce. Particularly, it's not just a matter of paying out somebody or the other person, or that person paying you out for that asset at that value. If it's an investment, you should really make sure and hopefully you're getting advice on this anyway. This is where you really do want a tax agent to help you to factor in any future capital gains or losses and make sure that that's all calculated in your settlement with your partner, because that is a space where people can easily get caught out, and they get caught out if they haven't got the right advice at the time.
Yeah, absolutely.
So thank you so much, Craig. Thank you to everybody for tuning in. This is I should have said this earlier, this was our very first webinar, and we look forward to doing more on different topics. So feel free to send us through our channels any suggestions for any future webinars. Thanks very much.